Hey everyone, you need capital to trade is what I'm focusing on big time today. Hope you're all well, hope you're all making lots of money. Don't forget trading's risky. Most traders do lose money. If you don't like losing money and you don't like risk, don't trade. Let's have a look at the markets. Let's see what's going on. Let's have a chat. Let's have a live show. Good old live show. There we go. Got a question on the 1% risk. Very interesting question. We'll go over that today as well. We'll go over the patterns, the systems, how to get in and out of trades. But one of the big things that I'm harping on is that you actually do need capital to trade. It seems there's a lot of traders out there that get told they can get into trading with no capital and make some money in it, and it is rather difficult. So I'm going to chat a little bit about that as well. Hello, Elaine. How's it, Shane? Hello, David and team. It's good to see you guys on board again. All back, all healthy, all well. The S&P 500 is still going up pretty well. Nice and strong, eh? Really good. Hey, it's coffee with Rob. Let's have some coffee. I saw it bounce off this support and go up. Did quite well. Now wait and see where it goes from here. It has broken its interim structure and its slight structure here. Seems to be heading up to that resistance. So that looks pretty good, actually. I was actually quite impressed with that. I took a Euro Great British Pound trade on this account, which I put as trade of the day this morning, I think. That looks pretty reasonable. Looks like it's going in the right direction. Once again, it sort of hit a range. It's bounced off this resistance, double top, and there she comes falling down. So that looks like it wants to come down a little bit further, perhaps all the way down to the support. That would be nice. That would be a good one. The United States dollar, South African rand, you all know I had this one for a couple of weeks, and it took me out for a profit, but not the profit I wanted. But it stopped out on a trailing stop. That long red candle, that size on a 4-hour chart is massive. But it is more to do with the dollar than the rand, because Trump actually announced 30% tariffs against South Africa and a number of other things, and he's almost sanctioning us, and we can't have money, and our economy's bad. And if you saw all the potholes in the roads up north, Cape Town, it's not too bad. It actually looks good. Nice tourist place. This, we get good roads, good everything. Everything works here. But up north, it's a bit of a mess. So, if you look at what's around you, I'm quite surprised that this is actually holding on as much as it is. But it is turning around again. It looks like it wants to break up towards the upside and break past those highs. So it's looking rather ominous as we speak. So we'll see how that one goes again. I might actually get back into that one again. I'm looking for another entry on Brent crude oil. See if we can get back into this one as well, because I'm still of the opinion that oil should be a lot more expensive than in the 60s, as with history. I'm kind of psychologically believing that should do better. Should do much better. So I'll just wait for it to break through that level, and then I'll take another long trade on Brent crude oil as well. And then we've got gold, which did break to the upside. And remember, I said it would break to the upside, and it did. And there we go. She's broken to the upside in the middle of the range here. Probably head up to the resistance and come back down again. You see it's in a nice range. Every time it hits the top, it comes down. Every time it hits the bottom, it goes up. Pretty much the same every single time. So you can almost bank on that one. Just remember, the more times that a price hits a level, the weaker that level gets. So in other words, you look at the S&P 500 here, you see it's like come back, hit the support, gone up, come back, hit the support, gone up, come back, hit the support, gone up. So support's relatively strong still. There'll come a point when it breaks that support, and the reason for that is, the whole reason that's bouncing off the support is not because there's a wall built there or anything like that. It's because there's money lying there. Every time it gets to that level, there's people that have put their orders there. There's people that believe that the market should turn there, and there's large amounts of money there. Believe me, it's not retail traders, it's big money. So it gets in there, it takes that money, and it goes the other way. But there comes a time, and there comes a point when either that money runs out, or those people change their minds on where they want their level, and then that's when it will break through that level and move on. So the more times it hits that level, the weaker it's going to get. So don't think because you got it hit 8 times that it's just so good that it can never break through there. They must have built the wall out of steel or something. No, it doesn't work like that. No, the more times it hits it, it's sort of chipping away at it. Eventually, it'll get through. So keep that in mind when you when you're looking at support and resistance levels. Just keep that in mind. And a year ago, we drove down to Cape Town. When we got there, my daughter asked me if we were still in the same country. Well, I'll tell you what happened to me on the flip side. I drove up to Pretoria to visit some family, and I drove into town, and my daughter asked me, geez, where are we, Dad? Are we safe here? So I pretty much got the opposite effect. And even I was thinking, and I had to say, yes, of course, everything's fine, but I'm thinking to myself, I'm not getting out of the car. Goodness me. No, it looks terrible. I tell you what, it looks scary. And when I was younger, I lived in Pretoria and it was beautiful. It was such a nice place. But now, when I drove through town, my daughter immediately said to me, where are we? No, I get that. Yeah, it needs work. It needs a lot of work. And maybe one day, everyone in our country will vote for a group of people or political people that will actually work for the people rather than themselves, will actually work for the country and actually help make our country better rather than making it worse with everything that they do. How do you decide which support and resistance to use? It's a good question. And I'm very relaxed with that. How's it, Tywald? I am very relaxed with which support and resistance I use because the charts don't make the difference at the end of the day. The charts don't predict the future. They just give you the ability to manage your trade. They give you the ability to pick a high probability trade. But if I am looking for the perfect support and resistance, let's say, if I'm looking for that special support and resistance, what I might do is I'll maybe take it to the day chart. This is how I normally show, particularly the new traders, the best way to get in. I'll take it to the day chart. So now I'm looking at a day chart and I'm thinking, okay, there's a whole bunch of candles and tails on there. Now the tails are a bit messy because sometimes someone will stand up and say something, you get this spike, and it messes you around. So you can use the tails, but there is liquidity in the tails, but do be careful of them because sometimes they can mess you around. Now this chart looks fine with the tails, but what I would normally do for safety's sake, take it to a line chart, because a line chart, what it does, it gives you closing prices, and closing prices will give you that ability to say this is where the end was for the day. And then I'll look at where is a support, there's a resistance level, clearly you can see it. And the best way to draw it is with these little blockies, because there's no specific area, and then you can take the top level there and say, okay, that's clearly a resistance level, and it actually matches with the one that I just simply put in on the 4 hour. So 9 times out of 10, that is the case. But then sometimes you pick up areas like this, which are a little bit more obvious, and you see it's hit the bottom there, at the bottom there. That might be a little bit more obvious to the downside. So then I'll draw a support level in and say, okay, so that's more of a support level. Now, what you'll notice is it's really close to the one that I've drawn in anyway, but there's a big level here. There's a much deeper level that it can go into, and that's basically how you can pick your support and resistance levels off the day chart. Take it back to a candle chart. We use the candles so we can see what's red, what's green, what's going up, what's going down, where the tails are. And the candles can give you a lot of picture as well. Undecided, sellers are getting back in, buyers are getting back in, long candles, short candles, pincer tops, all these types of things that candles can show you. So candles give you a lot of picture. But that's your basic resistance and support on the day chart. And then you take it back to the time frame you want to trade on, which is the 4 hour or the 1 hour. If you want to trade on a 5 minute, don't use the day. You can use the day for getting a general idea which way the trend's going, but don't try and draw these support and resistances in on day charts. If you're trading off 5 minute charts, then you're going to have to draw this in on like a 1 hour or something like that. you're going to have to drop the time frame down a little bit. And the lower you go, the more unreliable your information becomes as well. And if you're trading on the 5-minute charts and you're new to trading, just understand that you are going to lose all your money. So anyway, as far as you asked me how to draw the support and resistance in. So there's your resistance, there's your support. And this is how I normally show, particularly new traders, how to draw support and resistance, because that gives you an accurate level. And you know where your resistance levels and your support levels are in for the day, and maybe even for the week, and you've got the picture. And then from there, you can effectively, if you want to draw your trends in, if you want to draw your supply and demands in, or any of those types of things. I'm just going to remove this in the middle here because it's just getting in the way now. But if you want to draw a supply and demand, and you can, there's a level there of supply of money. Why is it like that? Because you see the huge amount of red candles down there. If there's 3, that's good enough. And then a little green candle before that shows you there's a supply of money right there. It's really close to the resistance, so you can know there's going to be a lot of money up in this area. And at the bottom, that's just a normal support. You can draw your trends in, see when it breaks the trends within the range. And so when you're drawing support and resistance, and you're always going to find ranges. You're always going to find ranges within that 9 times out of 10. Sometimes you don't. Sometimes you've only got the trend, and then you've got your levels in the trend, which can help you. But effectively, you're just picking an area where it hits often. So in other words, every time it gets to the area, it breaks away. Every time it gets to the area, it breaks away. Every time it gets to the area, it breaks away. Same at the bottom. Like I say, the more times it hits that, the weaker it's going to become, because that's not a wall that's built there. Like I say, it's money that's there, orders that are there, that every time it gets there, it gets pushed away. It gets pushed away by the money, and it goes the other way. Because either they've left orders there, maybe they believe that that's an area that the price should turn around, or maybe it's just a question of money that's been left there. So keep that in mind. That money will eventually move or run dry. So that's why you got to look at it and say, well, how many times? If it's hit there 8 times, you look at it and say, well, it hit a 9th time. I don't know, but we'll take a shot at it, but be careful on how you do it. But if it's only hit 2 or 3 times, you should know that it's probably a pretty strong area to look at. Well, that's basically how you put the support and resistance in. And I see Brewman's here. How's it, Brewman? Good to see you again. Good to see you. So I'd like to talk to you guys a little bit about having some capital. You know, the point is, a lot of people are getting into the markets without capital. I'm not saying it can't be done. But what I'm saying is, if you want to earn a living off this, you really can't do it without capital. One of the big issues that I find in trading is people get into trading with a view that they need to make a living because maybe they've left their job, or they don't have a job, or they've lost their job, or something equally ridiculous. Now, you're left with a few cents in your pocket, and you're trying to find a way to make a living because maybe there aren't jobs available or something to that effect. And then you start trading, and in the hopes, because somebody said on a YouTube video that you can make a lot of money with $1,000. Now, it is possible to take $100, $1,000, $5 and turn it into something if you're not living off it. In other words, if you're taking that money and you're just investing it in the market with the hopes that, hey, this will get better. And you can grow it, and you can grow it into a larger account. You can compound it and make it bigger and turn it into something over time. And you can, there are even guys out there that will try and, that have tried to turn $100 into $1 million in like 10 trades. It's actually theoretically possible if you win every trade correctly and hit all the targets. But you have to double up on every single one, and you have to use the full leverage on it. And then you can get there. But normally what happens is, here by the 6th trade, they lose the trade, and then they lose everything and have to start again. So that doesn't really work either. But when you're getting into trading, the whole problem is that if you need to make a living, you're going to have some form of capital. Now, that capital might be in the form of some kind of savings or pension or money that you've saved or whatever the case. But the whole scenario becomes a situation of Now you're risking that money, and it might be the last money that you have. And that's why I want to talk to you about this today, because this is quite an issue as well, because now you go on a course, you learn the lines, you learn the system, you come back, you get into trading, and you take that money that you've got, maybe it's the last money in the world to you, and you throw it at the markets, and you end up losing either a portion of it, if not all of it. Then you've got no plan B, and then you're in big trouble. And then you're sort of hanging on by your fingernails with what money you've got left, trying to trade it back. And that becomes insanely difficult. And like Bruman said, what can a normal person do? FX Trader says, is the solution prop firms? I don't say prop firms are the solution. I really don't. I didn't like prop firms up until about January of this year. I sort of warmed to them, and I realized that they can be a useful tool for those who don't have capital, or for those that do have capital and they want to protect it. Because you see, what I find a lot of people doing is they get involved in trading, let's say, and I hope you can see my little picture in the top right-hand corner. Sorry, guys, but I could make it bigger, but under the charts are here. It's fine. You can hear me at least. But what I find a lot of people doing is they do a demo, and they do the system demo, and unfortunately the demo is quite easy because it's just the charts, it's just the system. So you learn a system which kind of works, and you go back rather confident that you can win in the markets because you've done this course and this system, and it seems to do the trick. It seems to work for you. And then you go back and you start trading for real, and you find out that it's not actually working, that it's actually, you start losing trades, and you start losing a portion of that money that you've got, that little bit of money, that you've got. It doesn't help you. So now there's two ways to look at this picture, right? One of the instances is this. You can either trade or invest. Now, if you have an income on the side, or you're doing something else and you have income, then investing as a young man or young woman is a good idea, because you can add every month, you can set and forget, and you can just keep putting money in the market, and it'll grow to an insane size over years. If you want to do that, that's one great way to make money in the markets. Just keep on putting money into the market, but that's on a one-to-one. That's not leverage trading or trading futures. That's effectively, I'm investing in Coca-Cola, I'm investing in McDonald's, I'm investing in Nvidia, I'm investing in Amazon, and I'm buying shares, and I'm buying what I can afford right now, and then every month I'm going to add to my portfolio, not a share, but money. I mean, I can put it in the same share. It doesn't matter. I can buy Amazon this month and next month add to Amazon. It doesn't matter. What I can afford to put in, I put in every month, and then it grows over years and years and years and years, and you'll be surprised how that compounds. Much better than a savings account. And I think I've shown you guys that before, how that turns into millions very quickly over the years. First 10 years might be a little bit disappointing, but after 20 years, you're looking at it and thinking, I'm so glad I did that. 30 years, you're so rich, it's just uncanny. But if you want to trade, that's a different ballgame, because you need money today. And most people get involved in trading to try and eke out a more immediate living, because obviously investing involves waiting for years and years and years and years and years for the money to come in. And this is where the big issue comes in, right? Because now most people don't have 30 years to wait. We don't have 30 years. We can't sit here waiting for 30 years for that money to come in. We need money now. Now, this is the tricky part, because now you need money now. So what do? You get involved in trading. And now you're going to take that, maybe it's the last $100,000 in the world that you've got. I don't know how much money you've got. Some people have got millions, some people have got $10. But I'm just going to use that as a round figure and say, let's say the last amount of money in the world you've got is $100,000, and you go and invest it into trading, and it starts to get less, become less. You start losing. And it starts to become not just painful, but now worrisome, because you don't have that income that you needed and you expected. So what I decided with funded accounts for my own personal way of thinking was, well, people get involved with funded accounts because funded accounts offer you an opportunity to get a portion of the profits, whatever the case, from these funded account people. And it also involves a little bit more risk for your psychology. So you get involved in funded accounts. Now, even if you never make any money on the funded accounts, or even if you do make a small amount of money off these funded accounts, the one thing they will teach you is how to trade, because now you've got not just a demo, you've actually got some responsibility with your trading. And what they do teach you is a good way to learn how to manage the risk, how to manage the account, how to keep the account alive, how not to lose the account. So I warmed up to them in that sense. I think they're very useful for that. I think they're very useful for getting you into the market and you finding your feet in the market. And if you make a bit of profit out of it, that's fantastic. That's great. Some people might never even evolve onto cash accounts simply because they make enough money off the funded accounts, which means you're a pretty good trader. Okay. So yeah, it has become useful for that, and it has become useful for a lot of people that don't have the opportunity to get that capital that they need. But I don't say it's the answer to capital. What I say is it's a stepping stone. It's a helpful means, because it's still going to take you time to learn how to trade. And what size funded account can you achieve, can you get? So that's another thing to look at as well. You know, you can't withdraw every $100 as well. You have to make certain targets before you can withdraw money. So you have to look at that as well on the funded accounts. But they do offer a nice medium, a nice in-between as far as I'm concerned. So I've warmed up to them in that sense. So what I would normally say to a new trader that just learned how to trade and has just learned the demos and all that sort of thing, and I've got through it now, we know how to work with the squiggly lines now. Now we're going to apply our strategy and see how that goes. Try and not go straight onto the cash, and try and maybe just buffer it by doing a funded account or a prop firm in the middle, in between. And see how you go with that. Some real responsibility. See how you go with that. And then go from there and transition onto your cash if you do have a capital amount. And in the meantime, take your capital amount and invest it in shares, and maybe you'll be happier with that than actually trading it, because then you're not exactly losing that money as well. The thing is, if you have a small amount of money to trade with and you're actually trading that cash, the possibility of you actually making a decent living out of it is very small, because every time you make a small amount of money, if you're that lucky to do so, you're going to take that money out and you're going to try and use it, and then you won't have that capital amount. And that is the difficult part about it. A lot of people have been told that they can get into trading and make a living without any money, but effectively you can't. You need a capital amount. You need a capital amount to grow with. If you were to go and start a business today, let's say it's a little shop. Doesn't matter how big it is. It doesn't have to be a factory. It doesn't have to be anything. Just a little shop. Maybe you want to open a little tobacco shop, or I don't know what. Okay. And you want to get involved in that, but you've only got $100. There's only one thing you can do. You can either go to the bank and hopefully the bank manager likes you and he can lend you the money and you can have some capital to start it. Or you can go to mum and ask her. Or, you can't start it. Effectively, if you don't have the capital to start that little shop, there's no way you're starting it, because you can't pay the deposit on the rent. You can't open the doors. You can't put the shelves in. You can't buy the stock. You can't do anything. So you need capital to open that shop. And either you have the capital or the bank has the capital. I've always had a saying where use other people's money if you can. And that's always the better way to go about it. But yeah, it is very much without capital, you ain't starting it. And if you don't have capital, the chances of the bank manager lending you the money are remote as well. because for them to lend you the money, you've actually got to have some money. It's odd, isn't it? But if you don't have any money, they're not going to lend you any money. That's kind of how the world works. So yeah, unless you're a big buddy of the bank manager, you're going to be in a lot of trouble when it comes to that. It's a subject that I have to talk about because I've had so many people, trying to come into the market with no money and try and make a daily living or a monthly living, and you can't. FX Trader says if you're a profitable trader, you might be able to get investors. No, you're not allowed to do that. You're not allowed to do that unless you are a licensed financial advisor. You have to be licensed in most countries, I know here, and probably in the USA as well, that you cannot ask for investors unless you're a licensed financial company. I can't just go out there and ask for investors. That's illegal. If I go to old people and ask them for their pensions and tell them to invest in me, they'll put me in jail. I can't do that. You have to be a licensed financial company to do that. So no, you can't ask for investors. And look, that's why leverage trading came into play in the first place. Is because let's say you had 100,000, but you needed to trade 1 million. You could do it with leverage trading, but the downside to that was if you did it wrong, you lost the 100,000, which is still as it is today. So that's why leverage trading came about in the first place, because people didn't have enough money to trade those big amounts. Now they're giving you a funding. Effectively, they're funding you. They're actually investing in you. They're actually giving you the investment to trade with. I mean, if you've got 100,000 and they give you 900,000 extra to trade with, that's what they're doing. But then they're also telling you could lose it because you're risking your 100,000. Yeah. Growing your account takes decades. Some people takes years. Some people takes months. But you see, the thing as well, what Bruman says down here, Rob has the capital. But you know what the problem is, Bruman, as well, is when you have the capital, you tend not to worry that much with the actual, trading or desperate trading or whatever. I trade for fun these days. Most of my money is made in the investments. So it doesn't matter to me as much. It's nice to see profit and it's annoying to see loss and that type of thing. But the amounts and what have you don't drive me insane or whatever the case. And if it takes a long time to build or grow, it's fine by me. It's okay. I'm much more cautious because I know that there's a backing. I know that I'm sitting on something solid. But if that's not there, that's when the desperation sets in. And I think that's why most traders actually lose, is because of that panic or because they don't have that buffer. Like Bruman, you might have a lot of capital. You've got loads of money. So for you, you've got that buffer. So you can trade with confidence and comfortably and cautiously and whatever. You can take the odd risk here and there. That's no big deal. But for the guy who's on his last cents, it becomes an issue. And then they start making terrible mistakes. And those mistakes cost more and more and more. And I think that's one of the reasons that so many traders lose psychologically, because the fear kicks in when you don't have that buffer. And I do believe that the fear kind of dissipates because you've grown that buffer, because you've got that large sum to keep you going. So the fear dissipates. You don't have as much fear, unless of course you're risking it all, in which case you will. As Shane says, making sure your central nervous system is calm. You see, I think that central nervous system will not be calm if you don't have cover, if you don't have that cover. And I think that's why I say having capital coming into the market, if you don't have that cover, then I do believe that your central nervous system, your fear will kick in a big way. See, when you have that cover, it's okay. And when you've been there, done that, sold the t-shirt a few times, then it's also okay. So yeah, drink beer. I had a friend and myself and that my best friend actually. We would go around and we would spend a lot of time going to different beer places and trying out the beers. It was actually quite a lot of fun. I noticed that the video was buffering just now, so hopefully everything's okay. But yeah, no, we would go from beer house to beer house, beer places and whatnot, and we became almost like wine tasters. We were beer tasters. We'd be tasting these beers, having fun, trying out all the different ones. I became quite a connoisseur of beer, to be fair. And I enjoyed quite a lot of different ones. But lately, I drink a lot less of it. I don't know why. Still enjoy it though when it comes around. At 76, I'm trading to increase my investment capital so my pension income will keep ahead of inflation, hence the name Rumen. David, at 76, trading to increase my investment capital. Yeah, it's tricky because, as we get older, that investment scenario becomes more difficult because, time is an issue. And so that's when we start stepping into leverage to try and make it a little bit quicker. But you don't want to lose it as well. That's also important. You really don't want to lose it. You've got to be careful of that. If you've got enough capital, David, if you've got enough capital, it's not a bad idea to sometimes just, for example, invest in a few shares and dividend-paying shares, watch them grow. Over it's not 30 years, but maybe a year, whatever, 6 months. Let them grow, and use the money for the following year and that sort of thing. But you've got to have the capital to do that. As one of the problems is with leverage trading, people don't look at the downside; they always look at the upside. When people get involved in trading, they only look at the green; they don't look at the red. Maybe my brain is wired differently. I always check the red. I always see what's the edge here. What's going on? Why is this here? If somebody on YouTube saying to me, "Hey Rob, I'm gonna make you $100,000 in a week," first thing I do is I look at what's wrong here. What's going on? This doesn't sound right. It's just my suspicious mind. I am like that. So I'll always look at the risk first. What's the risk? Where's the risk here? Why are you trying to get me to click on that link? What's going on here? What are you looking to do? Maybe I'm just too cautious. I'm actually, strangely, I'm a trader, and traders are not normally cautious, but I've got a very cautious brain. So I'm always looking at risk, which is why I probably work with a system and strategy that I do. But yeah, it's just me. That's who I am. And I'm always looking at that sort of angle. So yeah, David, at an older age, it's always difficult. And because, you're looking at, I can't invest for the next 30 years. Am I going to be here at 106 years old? Most likely not. So, I got to look at more short-term things to do. But the trick with that is you got to be careful not to get on the wrong side of that and stay on the right side of that as much as possible, cautiously, the best way possible, very cautiously. Don't invest at all. Don't risk it all. Agreed that if you're on nervous trading, you're in the wrong business. Need to find a better hobby like gardening. Gardening sounds fair. I like gardening. Gardening sounds great. We could even have a YouTube channel on gardening. Gardening. My biggest step was discovering trading as a game. Not about the money, it's about the managing. Yeah, when you discover that trading is, I actually trade, like I said to you now, these days, I'm not so much in it. I realized I'm not in it as much for the money as for the fun. I enjoy it. I enjoy it, and it's addictive, and I keep getting stuck in it, and that's why I do it. Because I could just sit, forget about trading, and just let my investments pay me, because that's where most of the dosh comes from anyway. So I don't need to trade, but I like trading. I enjoy trading, and I enjoy seeing the success. I enjoy seeing, I did that right, and I made some money, and it's a bit of fun. And, so from my perspective, that's where I attack trading from. Where I see the problem in trading is when people are attacking it from an angle where they desperately need money today. And when you're attacking it from that angle without capital, I see a train smash coming. I see an oncoming train. Because clearly then your brain's going to start psychologically making a lot of mistakes when you're in that scenario and that situation. When you're doing it like I'm doing it, and many others, for a little bit of fun and enjoyment and success, and feeling the success and feeling the enjoyment of it. I mean, if I make a couple of $1,000 trading, I'm going to go and enjoy it and have a bit of fun with it, because it's not my main income anymore. My main income's on the investments. So it's just going to be fun money, and I enjoy using it. It's great. I've reached that age. When I was younger, I know I had that hunger. I needed to make the money. It was important to make the money, because then my investments were still young, and the only way I could make the money was with business or with trading. So that's why I understand it so well. And I was very fortunate to make enough money trading and to do well with it at that time. Many people don't. Many people end up on the other side of the coin. That's what I say, is you have to be careful. And then over the years, it grows and the investments grow, and then you're sitting on that comfortable buffer, and you don't have to worry about it so much easier. I was retrenched at 52 because of BEE, which meant I'm behind the curve. Yeah, you see that it is. It's in South Africa, this is a big problem. And for those of you who don't know what BEE stands for, because I mean, it sounds like a strange abbreviation. In South Africa, we have a thing called Black Economic Empowerment, which means if 3 people go and apply for the job, and one of them is white and one of them is colored and one of them is black, the black man will get the job if they have similar qualifications. That's how it works. And a lot of unfortunately reverse racism was born, and a lot of white people lost their jobs in South Africa. Now, I'm very how can I put this? I'm very racist adverse. I don't like racism at all, and it does seem to have flipped its head a little bit, and it's caused a big problem in South Africa for a lot of the minority groups, where you can't get a job, particularly if you're over 50. So a lot of people have had to find their own way. Now, I'm one of the very fortunate ones that can easily be averse to racism, because I grew up working for myself. I've always had my own companies. I've always had people working around me, working for me, etc. That's been a lot easier for me, and I haven't had that situation of being retrenched or anything to that effect. But it's terrible, and I understand it, and I just thought I'd explain what that means. That David says he was retrenched due to BEE, and it really can hurt you, because now, if you're retrenched at 52 and you're working towards a retirement at 65, there's a good 13 years that have gone from your pension that you don't have, and you have to try and catch up because you don't have enough money. Nobody else is going to give you a job. And if you're not like me, who's always wanted to be an entrepreneur and always worked for yourself and always found something to do, then it's difficult. And then to suddenly start having to trade, it's even more difficult for, to get involved in that. And the reason I'm pretty cautious and risk averse and, good at this is because I was born an entrepreneur, a businessman. So everything that I do, I look at with different eyes. I think out of the box when I'm doing things. So when I take on trading, I don't just take it on as a thing to to make money. I look at it and think, how can I make this work? It's just a different way of thinking is all, because I haven't, worked for a boss for a very long time. So yeah, that's what that is all about. That's what that means. Nerves are a thing of the past, FX trader. I really, I bet Rob doesn't get nervous anymore. I certainly don't. I sweat for very little. I mean, even on the outside world with companies and businesses, I've invested large sums of money in businesses before that I had to get working, and it's no skin off my back. As long as I've done my research and I know what I'm doing, it's okay. When I walk by into malls and things like that, I got this thing. I'll still look at an empty shop and think, ooh, maybe I should put something there. But I won't now because I realize, I'm at a point in my life where I don't want to do that. But, and my wife will stop me anyway and say, no, what are you thinking? Just don't go there. But I still have that urge. It's a terrible urge, to do these things. I'm always wanting to do something. I don't know what it is. That's the entrepreneur in me. There's always something, always want to do something like that. Actually, David, I agree with you. Keeping your mind sharp with trading and online stuff is fantastic. I actually also, I'm much younger than you, but I like to keep my mind sharp, and I actually keep my mind sharp with computer stuff and technology and AI and all that stuff. I'm loving it, and it keeps you thinking, because if you fall behind, I noticed it with my parents-in-law. Unfortunately, I don't have my own parents anymore, but my parents-in-law are much older than me, and I look at them and they struggle with the simplest thing like a phone or whatever the case. If you don't stay with it, then it's not good. So it's really good, David, to stay with it. I agree with you totally. And the more you keep your mind active, and the more you keep talking to people, and the more you keep doing business. I think the minute you sit down and do nothing and lie in bed or watch TV, that's the end. It's going to be over for you very soon. David, my dad lived to over 100, so with longevity in the family, I need to prepare. David, if your dad lived to over 100, maybe you should start investing now. Jeez, dude. You're going to need that money. Yeah. Hi, Rob, just saying I'm short on gold. I'll have a look at that in a sec. Yeah, I'll go and have a look at that. I decided to go short on gold for rumors. Let's start a business. Yeah, my wife will kill me. Fib market structure. Please be mindful taking short trades. Do you think in the future AI will make trading harder for us humans? Okay. The one with Ruben, let's start a business, Rob. Ruben, my wife won't let me start another business because when I do these things, I'm always away from home. So she's got me at home now. So that's, yeah, she'll kick my ass. It's time for me to take her on holidays and stuff, seemingly. So, okay. Relax a bit, enjoy life. Yeah, that's fun. Okay, so gold short. Shane said he's short on gold. Shane, what did you base it on? I see someone else is asking that question as well. Fib and market structure. I'll have a look now. Do you think the future AI will make trading harder for us humans? No, AI cannot make trading harder for us humans, because behind every AI, is a human being. Okay, so AI is not going to take over. AI is never going to take over from trading. There will be a lot of robots in the trading game out there and whatnot, but Nobody in their right mind is going to give a robot all their money and just let it run. Most people, unless they really insanely trust it, it's normally programmed by a human being to their system and the way they work. So in general, I don't see AI being a threat to humans because AI doesn't work for money as well. Whereas the human beings trying to make some money. What AI might do is that it might give you more accurate predictions on the market and that sort of thing. So people might use AI for more information and that type of thing. But will it affect you in the long run? The market will always be 50-50, even if AI thinks it's clever, because AI can only see these charts. It can't see, unless they do something and tweak it, it can't see somebody changing their mind like Donald Trump, every 15 minutes. It can't see that. It can't see what he's thinking or how he's thinking or what the UK is going to do today or tomorrow, or if somebody's going to drop a bomb or whatever the case. You just, or a bank suddenly going bankrupt. It can't see that. It can only see the charts. So AI is at a disadvantage when it comes to that, unless it is somehow designed to pick up on what's going on in the outside world, which I'm not saying it can't be done. It might be able to do that in the future. I don't know what the future holds, but it's going to have to be able to do what a human being can do. You sit here, you look at the charts, you know what's going on, but you can also have one ear on what's going on around you. And that makes a difference. That makes a difference when you're taking your trades. If there's a possibility that something's going to go pear-shaped in the world and you're about to take a trade, you might actually be affected taking that trade because you know that thing is happening, whichever positive or negative, and it will affect the way you take that trade. So bear that in mind when it comes to AI. The chances of AI actually beating you at a game like this is probably remote, and probably won't happen. Okay, so what are we talking about here? Arthur says Bitcoin is a great buy right now. And then Shane says, okay, so gold short is Shane's trade. Okay. I'm just looking at it. It's in the middle here. There is a bit of a resistance there in the middle. I am kind of struggling to see the short trade here. Where's Fibonacci? That fib. Just having a look at what you see. Well, okay. We'll see what happens. Bitcoin, on the other hand, somebody said, do you want to go which way? Buy. On Bitcoin. What I'm seeing on Bitcoin at the moment is a slight bearish tinge. Not mega. There is a nice sort of area of money here, demand of money, that it's bounced off. Probably a support as well. And it's bounced off and it's going up. The risk to reward's not that great because it looks like it might hit this resistance and just keep on falling over for now. It did come all the way back to 112, which I thought it would hold at 115, which it didn't. It broke through, which has come down to the next level, which is 110, 112. So now the level is between 112 and 123, 125, let's say. We've got quite a wide level here. I'd say it's most likely 120 again, because that was just a spike out, and it's probably sitting around this 120 level. So we're probably looking at between 112 and 120 for now, but there's a slight tinge to the downside. It's kind of falling over. Almost like the lamp pole can't hold it up and it's just waiting to the downside. I don't see it really going much below this level right now, as long as it holds up. But I'm not seeing any sparks either. So if I was going to go long on Bitcoin at the moment, I would actually either wait for it to come all the way back down here and retest and then go, or wait for it to break through that trend resistance and then go. But your risk to reward's not there. It's 50-50. In other words, your reward's there and your risk. Let me show you with a bit of a picture here. There's your risk to reward. So your reward is effectively there, and your risk is effectively there. Now, if you look at that, your risk is bigger than your reward. That's not good in any scenario. So it's not a great trade at the moment. I would weight it more to the downside. As we speak at the moment, it looks more negative than it does positive. So Bitcoin, I'm not a big fan of going long on that at the moment. Trend line. And then here. Okay, so then you've picked a short trade on this. It does worry me a little bit that it's higher than halfway on the bear run. And it looks, on the short term, I'd say it might get to 33.50. Because my problem with gold, let me just look at gold here. Oh, this, and it's a very small one, but there it is. There's money lying there. Might bounce out of that and continue on up. Looks more like it wants to go up than down. I don't know, but we'll see. Jane, I have to do the opposite to you again. Copper. I don't think I've got copper on this particular platform here. We have it on others. I haven't looked at it for a while. But it's another one of those commodities. Commodities are cyclical, eh? They go up and they go down. They go up and they go down. When it comes to commodities, I kind of stick to gold and oil. And I don't really bother with the others because there's not a lot of liquidity in them. And they just tend to go up and down anyway. So you can pick them off in a range. Gold looked good like 3 days ago. It did, yeah. As I said a couple of days ago, I called this long. I think I even had it as trade of the day for you guys. I called it long, and then it shot through the moon once again, I think, while I was sleeping, so I just left it. But I did call it for you guys. I told you guys it'd probably go long. Yeah. It looked like it wanted to go long as well, particularly with the US 500 giving a little bit of negativity. Just seems to be rolling over here. Wonder if it's going to roll over again and come down. Everybody's so excited about the US 500 and it going up. It is very bullish, eh? Very strong. It's a very strong trade, and it has bounced off this level. But I just wonder if it's going to give everybody a little bit of a shocker today, or a little bit of a surprise. All it takes is for somebody to say something silly again, and off she goes, as always. As always. There was a stage when I used to trade copper. There's a whole bunch of fundamentals that go with it. I'm not going to go into that today. That's quite complicated. The copper fundamentals, the fundamentals of copper. I tell you, there's a lot of stories that go into that. But my big problems with these other commodities, or these different commodities like palladium and platinum and copper and whatnot, is their liquidity is not as good as, for example, the normal trades like indexes, gold, Brent, Forex, crypto, that sort of thing. There's much more liquidity in that. And you need liquidity to trade. You need movement. If those other commodities tend to sit still, not do much. It's like trading bonds. You can trade bonds as well. Nothing wrong. 10-year yields, 2-year yields, if you know what you're doing. You can trade those as well. Not on these funded accounts, forget about it, yeah. Like on normal accounts. Trade those. Hey, Sir Lunchalot. Good to have you back. Jeez. Good to see you, man. Having lunch? So if we take Sir Lunchalot and Brewman and we go out, we get lunch and we get beers. It sounds good. Sounds fair. Go down the pub, get some beers, have a lunch. That's it, you see? So Lunchalot and Brewman together. Perfect. Absolutely perfect. Yeah, totally. Yeah. Oh, sorry, Shane. You can join us, definitely. You're in. Definitely in. Oh, without a doubt. Yeah, totally. Gee, it was amazing. Imagine. Oh, gosh. Sounds good to me. Anyway, yeah, so, yeah, I went through that and at length the old rant on you need capital to trade. So for those of you who missed that, do yourself a favor and go back and watch the early part of the video where I did my rant on you need capital to trade. And then somebody asked me about the 1% risk. How can 1% risk make you money? And the question is not on the 1% risk. Now, one thing I've got to say is you guys can risk any amount you want. It doesn't matter. If you want to risk 10% per trade, be my guest. There's no problem with that. You just have to understand that you need to keep your risk the same on every single trade. The only reason I risk 1% of an account is it looks little when you're looking at a $25,000 account because this is just fun. But when you start putting $1 million account down, then it becomes $10,000 per trade. And if you put 10 trades in a row, you're risking $100,000. Now, just recompute that in your brain as to your 1%. Okay. So that's why I use 1% risk on my accounts. And I just keep it like that. It doesn't matter what size the account is. These accounts, I just use the same risk. I could change it to 2%, whatever the case. It really doesn't matter. But the larger accounts, that's a different ballgame. And on those larger accounts, when you put 10 trades in a row down, you're starting to play with $100,000. You're not playing with like $250 anymore. So just keep that in mind when we're talking about 1% risk per trade. How do you make money? I just keep the 1% picture there because at the end of the day, that's how you keep your accounts alive. If you lose 10 trades in a row, which you shouldn't, you lose 10% of your account, which is clearly recoverable. You want to do 2%, then it's 20%. It's okay. It's up to you. If you want to risk 10% per trade, then you lose 10 trades in a row, you lose 100% of your account. So be it. All I say is keep the risk the same. So just to answer that question, because somebody asked me that question, like, yeah, 1% is not enough. Okay. It depends, what you're doing. And it depends why you're doing it and what's, I suppose it depends on the sizes of your accounts and things like that. But yeah, like I say, totally up to you what your risk is. Just keep the risk the same. Keep it the same on every single trade so that you know what your risk is, and then try and make more on the wins, because it really probably doesn't matter how much the risk is. As long as you keep it the same and you're making more on the wins, then you'll be okay. So yeah, no, the 1% thing is just something that I use. And I've got my reasons for it because I was looking at bigger money, and this is obviously it's much smaller, but it doesn't really matter. It's still the same. And you've got to look at the bigger picture. You're not just trading with one trade most of the times. A lot of the time you've got 5, 6, 7, 8 trades going, And if you lose them all, for whatever reason, where do you stand? Always think of that. Where do I stand if I lose them all? Or if I have a losing streak, where I just keep losing trade after trade after trade after trade. And if you think that doesn't happen to people, it really does. It does. So can you afford, if you've got $1 million account, can you afford to lose $100,000 if you lose 10 trades? Are you happy with that? Are you comfortable with that? Can you sleep at night if that happens to you? And can you make it back? So keep that in mind when you're choosing your risk factor. But yeah, so that's why I keep it like that, because, you know, for me, maybe a $25,000 account is small, but I look at it as, for somebody else, it might be the only money they have and the last amount of money in the world. And if you risk 10% per account and per trade and you lose it all, what then? Can you afford to do that? Can you imagine risking 10% per trade on $1 million account, $100,000 per trade, and you lose 10 trades in a row, so you lose $1 million. Just think about that for a second, okay? Now, the same thing happens to a person with a $25,000 account, but the difference is, for you, $1 million was a lot of money. For that person, $25,000 was a lot of money. So this is why I try and promote the 1%, okay? To try and keep it safe for everyone, to try and keep it comfortable for everyone. But if you feel like you're the guy that can risk much more than $25,000 and that, you know, why am I risking 1% there? Then by all means, risk it all. If you can afford to do that and you can replenish the account, that's great. Do it. No problem. I just don't want to promote to guys to do that and then they have a problem. Okay, so the 1% is to keep you in the game. 2% will also keep you in the game. But when you start going to those higher amounts, because the greed has set in, because like I said to you earlier, what people see, they don't see the red, they see the green. All they see is how much they can win. You have to look at how much you can lose. Look at how much you can lose, not how much you can win. The winning comes. The losing is what it's going to cost you. So can you afford that? If you can afford it, then you risk that. That's up to you. You know, like I said, everyone's got to find their balance. Everyone's got to find their comfort zone on loss. You know, how much can I afford to lose? How much will I be able to lose and still sleep at night or still carry on living as per a normal human being? And some of us are more risk adverse than others. Some of us are really aggressive and some of us are very cautious. And us cautious ones tend to last longer in the world. The aggressive ones tend to bump their heads. So, yeah, it's totally up to you, like I say. So that question came to me, and like I say, I honestly don't mind answering that question for you, but, you know, you got to look at what you can do. Okay. FX trader, how do you add to your trade from Mayhem? Okay. Ruben's too scared to come to South Africa. Okay, fine. Just kidding. I agree with you. Okay. How do you add to your trade? Okay, we'll go over that now. Do you look at correlation before putting on multiple trades? Yes. No correlation. If there's correlation, you're wasting your time. So you might as well just put one big trade on. Just try and avoid correlation. Okay. Try and make sure you're not correlated on trades. And then how do you add to your trade? I'll go over that in a moment. Big spiders. The big spiders are also in South Africa and Australia. We do have big spiders. We've got the most poisonous snakes in South Africa, even though Australia has also got the most poisonous snakes. So we're not really sure who's got the most poisonous snakes. I was in the army with a bunch of Portuguese guys. It was fantastic. Lovely people. Absolutely lovely people. That's why I won't go. Lol. I would love to see the Western Coast, but I will see it on YouTube. You know what? I need to start making some videos outside there so you guys can see the West Coast. How's that? Right, what's your thoughts on trading more than one market at a time when day trading? My thoughts on trading more than one thing, one market, one anything at a time is go for it. You can't do better than there's so much available to you to trade. Just trade it. It's all the same. If you follow the strategy, it's all the same. Trade everything, man. Trade as much as you can. Don't get stuck on one thing. No, that's silly. Chris, yeah, fantastic, Chris. There you go. Sorry, I missed your name there. Chris, welcome to the club, by the way. It's good to have you on board. We welcome everyone here and we love having a bit of fun. But yes, my thoughts on trading more than one market at a time. My guys know me here. Trade everything, dude. Trade absolutely everything. If there's orange peels or lemon peels to be traded, trade it. Trade it. It's tradable. Go for it. Go mad. As long as it's tradable, trade it. You can't get stuck on one thing because you get stuck on that one thing and then you're hoping that it's going to give you a trade and then it doesn't give you a trade and you're following it, and then you start forcing a trade because you're not getting a trade. Just look for something that's coming to you and it's going to give you a trade. Just go through all the trades until you see a pattern that works and go for it. Just look for something to trade, man. Can we do a Zoom meeting one day? I keep thinking about that Zoom meeting. I'll figure out how to do it. Okay. Thanks, Brewman. I'm sure I'll be allowed to do a Zoom meeting. But yeah, no, I must figure it out. Let's figure out how to do that. We'll do a Zoom meeting one day and try and do it live as well. I saw one thing there. I think you're only allowed to do an hour or something like that. Otherwise, I must have a paid Zoom account or something. I don't know. I don't use Zoom. So yeah, I'll figure it out. The most dangerous thing in South Africa are those big flying cockroaches in Durban, which is where I'm from. I actually didn't realize they fly, but you get big ones here in Cape Town as well. And then I figured out that they actually do fly. I like money trading thoughts. Can I organize with you? Crazy. Okay, somebody asked me how do you add to a trade. So let's be realistic and do that. How do you add to a trade? So for example, let's do a trade that we've actually got on the go at the moment. So here we have the Euro Great British Pound, right? Euro Great British Pound, we've got it short and it's going to the downside. It's going to the downside nicely. It's in the green. So what you can do here is when this goes into a reasonable profit somewhere in the middle here, giving you about $150 profit or something like that, then you can bring your stop loss to cost, bring it up to cost, and then start trailing it up. If you see that there's a level in here, like for example, here's a level of demand where it might bounce and go back, right? So that might be an area where you might want to be thinking, I need to get out of this trade, perhaps. But if it breaks through there and starts breaking towards these levels down here, that would be a breakout, and that would be a good opportunity to add to your trade. So what I'm saying to you is look for areas where there's a new trade. So don't just add to a trade because you feel like adding to a trade. So you want to, like, let's say you were in this trade here. On this particular account, we're not, but let's say we are. Now, let's say it's moving up and it's going up nicely and you've bought it in here and it's going long and you've moved your stop loss up to cost and everything's going well. When do you add to this trade? You could add to it here, but why? It's just a normal trade. It's going in your favor. Where I would add to the trade is when it breaks that upper level, that resistance, and it breaks out and says, we're going. That's a new trade. So you've made all your profit. You've moved your profit take away. You've made all that profit, but now you've got another new trade which has grown. You can add to the trade here and follow it further up the curve. That's when you add to your trades. Add to your trades when you see another trade develop. another system scenario. Okay. So for example, you take a trade because it bounced off the support, and then it goes, and then it breaks through a trend resistance or a resistance, and it breaks up. It's a good time to take a new trade because you've got a new trade coming in. That's how you take add to your trades or double up on your trades. Rob, have you trading on cross, and when the trade moves up, increase level, take the margin, and then add it back the trade? Have you trading on cross, and then when the trade moves up, increase the leverage, take the margin, and then add it back to the trade? Increase the take the margin, add it back in the trade. Rumen, something like that, yeah. Basically. So you're basically just adding and increasing the margin, adding to the trade. Yeah, that's it. Okay. Don't forget also to move your take profit and more too, following the one as well. Yes, Daniel. How's it, Daniel? Good to see you again. So yeah, just so what Daniel said, don't forget to move your take profit as well. So, when you're at a level like this, you want to move your take profit up to cost, and you want to start moving your take profit up behind it and trail it up. While it's a normal, the first trade, just keep trailing it up because you're making money. It's all good. But when it breaks through into another trade, another new trade, then you can decide whether you just want to add to the margin, whether you want to double the trade, where you want to just make it a little bit bigger, whatever the case, and just have another trade going up. And in most cases, like in most of my accounts, it kind of hedges, so I end up with another trade anyway. It doesn't average out into the first trade. So I'm sitting with normally in most cases 2 trades anyway, so I can effectively work the trades up that way. And I don't get confused as to where my entry levels are and that sort of thing. But that some people don't have a hedging account; they got a normal account, in which case it averages that out into one. So you just have to work it out for yourself. Okay. You end up with a large trade, but be careful of this, Bruman. A lot of guys, what they do is they think that dollar cost averaging involves building a trade, and it's not really, because what actually happens to people is, for example, they get involved in a trade, and then they say that they'll get every trade like this. So if you want to risk, say, $250 on this trade, and you want to get into the trade, and you say, well, I'm going to build the trade because I'm not confident on the trade. So you start with $25, and then you add another 10, another 10, another 10. What normally happens, the trade goes in your favor, and you don't make the money that you wanted to make in the first place. So it's better to start with a full trade, work with that trade, and if you see the opportunity, then add to the trade. Then give the trade a bit, make the trade bigger with a view to another new trade. So in other words, you've got 2 trades on one thing because it's going in your favor and it's going well. And then take perhaps the same risk on the second trade as well. But, on an added trade, you're just growing the trade, you're just moving it in your favor. But be careful of trying to build trades. Building trades is a bad idea. That kind of what people tend to do is they tend to say, well, normally I would risk like this size of trade, $250 or $1,000, whatever. And then instead of doing that, I'll risk 10% of that and start working my way into a trade. But what you find out is that when the trade goes in your favor, it normally goes in your favor pretty quickly. So it'll be going in your favor on a very low trade, a very low amount. So you're going to make a very small profit. And when it goes against you, it normally goes against you quite quickly as well. And then you end up trying to build a losing trade. So it's not a good idea to dollar cost average into a trade. It doesn't work. You don't make more on your wins. Okay. Yes, so when you trade, you end up with a bigger trade. That's basically it. But in my case, most of my accounts, I end up with 2 trades because I end up with a hedge. I don't know. It's just how it is. It's just the way I choose my accounts. I like them to be hedged so I can have 2 trades and see what's going on. But you can have it all on 1 trade. It's fine. Same thing. You have a bigger margin, bigger trade. Yes, Bruman, exactly. You can start with $100 and end up with $200 in margin, something like that. Yeah. Says, please make a video on hedging. I suppose I could do that. There was a time, I don't know, you guys in the USA do a lot with futures because you can't do CFD anymore. I went away from futures a long time ago. Well, they are all futures actually, but I went away from actual futures into contracts because it was such a nice thing to trade, an easy thing to trade. In South Africa, we can still trade it. But with the futures, where you could actually build a trade by hedging in such a way that you could never lose, with time factors in the futures, and it's really quite complicated. Because over time you get certain growths and all that sort of stuff with futures, and there was a way that you could build a trade that you could just never lose by hedging it. That's quite insane. But normal hedging is straightforward. I'm still mixed about trailing stop loss. I do trailing stops because, how can I put this? If it's long term, then it is worth it. Look, a couple of times this week I got taken out of my trailing stop loss for a lesser profit than what I would have liked, but I still made a profit, and the price did go against us. So, on that side, but both those trades could have worked out. So on that side too, if I'd kept the stop loss far away, I'd still be in the trade. It's questionable, but sometimes it's not a bad idea, and it just makes your trade free. It just makes your trade free and profitable. I like trailing stops because it takes it out when it turns around. You make the money and you just get back into the trade when you need to. That's all. You don't have to have trailing stops, but it helps sometimes. It's not the worst thing, it's not like a nightmare or anything like that. Yeah, I'll start a trade with 100, end up with 500. There's Shane Zimmerman. Good to see you here too. Thanks, Daniel. Now, the reason FX trader, a lot of people switch from Forex to futures trading is, you understand that futures trading is not indexes. It's like futures these are all futures at the end of the day, and CFD just uses that to contracts, to just use that for you to trade on. But what these brokers do is they buy futures contracts and they put them out there for you to trade. Futures contracts expire, okay? And futures contracts are there for like 3 months or whatever the case. And you get these days when you get futures close out and you get these big moves up and down, okay? You don't see it if you're trading contracts for difference or shares or whatever the case, because you don't see the futures contracts. But if you're trading on futures contracts for real, then you have to basically guess the price in advance of where it's going to end up on closeout. That's how futures trading actually works. And so these guys buy these futures contracts for you to trade on and play around on our contracts. But on futures itself, that's like a futures trade. In other words, you predict a price sometime in the future. That's why it's called futures trading. And that's basically how that works. And the reason the USA has gone into taking away CFDs, some places in Europe as well, because some folks were taking advantage of it. Some of these brokers were taking advantage with this whole scenario, because like I said to you, what they do is they buy futures contracts and then they let you trade contracts on it. Now, with the guys taking advantage on it, they sort of took that by the wayside. Now they force everyone to trade into genuine futures, and then there's less leverage on that. There's less risk on that. You're only allowed to trade with certain amounts of risk. They got some rules in place which prevent people from getting destroyed, and so on and so on. So they put a lot of legislation in place with regards to that overseas. Well, from my perspective, overseas. And I don't know. I just like trading contracts. I prefer it. If you get a reputable broker and you can trade contracts, you can make money. And in South Africa, there's a couple of reputable brokers that you can trade with. And even in the UK, I mean, there's a couple of reputable brokers that you can trade with. But there was a lot of these fly-by-night guys that came out there, and then they messed it up for everyone. It's unfortunate, but that's how it is. Because contracts are much easier to trade than futures. But it depends how they let you trade the futures. But actually trading futures is a different game. In South Africa, the best broker is your GT247. They're the best. There's plenty of others, AVA Trade, IG, all these guys. Overseas, a lot of guys are using this Black Bull thing and whatnot. I don't want to name too many brokers. I mean, you must choose who you like at the end of the day. I got my preferences, and that's that. And then there's all these funded accounts as well. Wow, that gets tricky. All these funded accounts. You know, even I left a couple of links in the description on funded accounts, and then somebody mentioned to me that one of them is he's not happy with them or whatever. It's they're a scam or whatever. I don't know. You choose who you want to choose. It's kind of up to you. It's difficult to promote brokers as such. I've got the brokers that I'm happy with, and then in South Africa you can also trade even CFDs of the banks. A couple of the banks you can actually get accounts with them as well. You can have investment accounts with the banks as well. So the banks offer quite a lot as well. I had a direct JSE account, Johannesburg Stock Exchange. I had a direct account where you could buy and sell directly. But I found that having a broker was so much better because brokers are instant and you can get the job done instantly online. But with the Johannesburg Stock Exchange account, they take nearly a day. They choose the price that they sell for. That was like insane. I was like, no, that's not happening. That's not happening. So you normally got to have someone in between you, a house in between you and that, and you can click immediate sales. Otherwise, you're going to have a problem. But yeah, there's lots of good brokers out there, and I don't hold anything against anyone. But like I say, you got to choose them yourself because it also depends what you're looking for. Are you looking for good people that you can talk to, people that you can meet, people you can deal with? Are you looking for best prices? Are you looking for and also, are you looking for a specific type of platform? Are you looking for indicators? What do you want out of the whole deal? You got to look at what you want. But what I would say, I don't want to recommend anything. What I would say is look for a broker that's been around for a while, that's been around for a long time. I'm not saying they can't close down and go bankrupt, but at least they've been around for a while and they've got some kind of track record. Look for a track record. Don't choose the broker that opened 6 months ago, because they'll offer you the world, they'll offer you everything for free, but you don't know if they're going to be there next week. And that's always questionable with these fly-by-night brokers. Yeah, I've seen a bit of speculation on the margin. I think you have to, I don't know what there's some rule with regards to the margin, what you're going to be allowed to trade, with the amount of money you've got, or how many trades you win or something to that effect, or you've got to make a profit before you can have a certain amount of margin. There's some rule over there. I'm sorry, but I don't know the rule that well because I don't live there. But yeah, if you live there, find out about that because it's quite important. It's going to be quite important to you. And I see the future as this is, I think a lot of the authorities have realized that the win in the market is time in the market. In other words, investments. And I think they're trying to push people towards that. They're trying to push people towards investing in the market and rather than trying to trade the market with fly-by-night brokers. And I think maybe that's what they're trying to do. But I think it's a bit too much of nanny state stuff. No disrespect, Shane, but I've always called Australia a bit of a nanny state because they're always watching what everybody does and how they do it. And it's for your own good, protecting you and all the rest of it. But they kind of take a lot of freedoms away from you at the end of the day and don't allow you to do certain things. But, the big problem for us here, like down here in Cape Town, for example, is when America does it and then England does it and then Australia does it and then Germany does it, eventually it filters through to us as well. We end up with the same rules. So you can expect it to end up here sometime as well. Shane, don't worry that Brent might bounce. I'm waiting for Brent to bounce, and I think that Brent's going to bounce. I'm hoping that Brent's going to bounce because I want to buy it. Look how many times it's hit this support. One, 2, 3, 4. This will be the 5th time. Now, like I said, the amount of times that it hits it, eventually it breaks through. But I just got a feeling that it'll bounce again. So I'm waiting. I'm thinking I want to buy it. I'm thinking of buying Brent. It's the best way. Shane, where's the FIB 60% on this? I don't want to draw it in. What price is it on? Is it on 67.40 or a bit lower? Give me that figure there, Shane. Canada is turning into Aussie-led. Jamie, welcome. Good to have you on board, man. Investing is really trading on a very high time frame. Actually, no. Investing, you see, I separate my investing account from my trading completely. Because investing, what I do with investing is I call it set and forget. I invest in shares, I buy them and I forget about them and I leave them. I do keep an eye on the companies, let's be fair. I mean, if I see something going pear-shaped, I will most certainly sell out of it and put it into something else. But other than that, I leave it forever. Okay, I put it in there and I leave it forever. And every month, if there's a bit of excess money, I put it in there and I add to it and add to it and add to it. Every month, add to those shares. And it just grows and grows and grows and grows and grows. And it pays you dividends and it grows and it gives you income. So, yeah, investing is not really trading. It's a totally different thing. It's the one area where I will dollar cost average. I mean, I will, if I see a share's like corrected slightly, I will add to it. I'll buy more. I'll add to that share and see how it goes in the future because it just keeps on going up, going up, going up over time. So no, I don't think of investing as trading at all. I think of it as I'm invested in it, I own it, I own part of that share, and that's it forever. And I'm not selling it unless I see there's something wrong with that company. Then I'll sell it. Then I'll be like, okay, time to let go, buy something else. But then I'll sell everything in that share and I'll put it into something else. And the way I look at things is if I can see the business, I'll actually look at how it's doing in general, and then I'll decide for myself if I see any future for it. I agree with you, Rumen. When is the rand going to drop? It's driving me insane. 61% is 675, 50% 68 on my markup. Okay, 61%, 675, 75. About there. Okay, so it's very close to my support level. So yeah, I'm thinking we're going to get a bounce there then, Shane. Looks good. 66. Okay, all right. Still close. It's like really 66. That's a bit further down. It's quite far down, but there is another level there. Oh, that's interesting. That's actually quite interesting. You see another level there, Shane. There's another level further down here. So that'll be a 50 and that'll be a 60. Interesting. Okay, good. Yeah, I'm looking at Brent. I'm thinking I'll take a shot at Brent. Looks like a good trade. Does look like a good trade. So I'm glad we've got to the point where you guys are telling me what we can trade. And I'm not telling you what we can trade. See, that's where we get to. Good. How's it, Lion? Good to see you again. Good to have you on board. Good to see you here. Always lovely to see the crowd. Always lovely to see the boys here. That's fantastic, man. So good. And like I say, it's good to get to the point where you guys can tell me where to trade. That's perfect. That's what I always wanted. And then we can show the new guys what to do and how to do it and the best way to go about it, man. We can take it from there. I wonder if the S&P 500 will actually break to the upside and go. It'll run. Looks like it wants to run. I actually missed that. I should have traded it yesterday. Would have been a goodie. No, I traded the Euro, Great British Pound. And I want my South African Rand again. I was actually thinking it would come back a little bit and then I'd get in again, but it's now breaking to the upside. It's actually looking pretty good here. And just see here. It looks like it's going. So, looks like the Rand is going to go now. Good chance of that. Very good chance of that. Yeah, it's time for me to do some copy trading, Daniel. It's time for you guys to pick the trades and for me to copy. Trading's 50-50 anyway, so it doesn't really matter. Yeah. Yeah, you see, this is a buy. This is like ready to go again. So definitely looks good. Looks like it wants to go. US dollar, South African Rand. Looks like a buy again. Looks like it wants to go. Let's just make sure it doesn't bounce off there again. But yeah, that's looking like a buy again. And gold is... Shane's calling gold short. Just watch this thing here, Shane. Just watch this little guy here. You get a green candle coming out of that. It could be a nasty one. Okay, could turn around and go the other way. But just keep an eye on that. This could be a result of the US dollar as well, the Dixie. Okay. Because I see that the Rand is starting to go that way. And I'm also seeing the Euro Great British Pound. There's a couple of things happening here. Let's see Euro United States dollar. That's also starting to turn around and go down. So just it could be a result of that. So gold could be coming in to take this money and it might just bounce. Can't say for sure, but you're on the right track as we stand. Oh, my yawning. Sorry, guys. Yeah, no. It was a difficult week last week. Tough week. Tired me out. Maybe I should get more sleep, eh? Get more sleep and get some sleep on the go, man. That's the same resistance I am keeping an eye on. What I said there on gold. Andrew, thanks. Yeah. Sorry, guys. I'll stop yawning. It's the trouble when you get tired. You don't realize that you're yawning, and then you make everyone else yawn. the infectious yawn. I'll make my picture bigger, and I'll sit here and yawn, and I'll make you all yawn, and you'll all be falling asleep here. Now, I don't want you to fall asleep on my live shows. That's actually bad. That's a bad idea altogether. Imagine. Now, what I did, Daniel, on my younger thumbnails, I've been playing around a bit with thumbnails. I have a bit of fun with the technology, and so what I do is I have it enhanced. Play around with it a bit, make it look a bit cool. Just messing around with the thumbnails to make them look nice, and yeah. So it does make me look younger, doesn't it? Yeah, fantastic. Everyone wants to look a bit younger and a bit better, eh? Thanks, Daniel. The correlation between the different time frames is actually quite important. And what you normally do, all right, so let's take this US dollar ZAR as a good example. So is it bearish? Is it bullish? So what we'd normally do is you go to the higher time frame and see what you've got here. And then even higher if you want to. So you go to the week. So if you go to the weekly and you've got this range here, what it's showing me on the weekly is that it was relatively bullish last week. So now I know that on the weekly, the last candle was pretty bullish. It was a bearish run into this. It's run along flat. It's hit support. It seems to be turning around and going up. Then if I take it back down to the day chart, get a little bit of a picture of the day chart. On the daily, it broke down to the downside, but there is a green candle going back to the upside. So it looks a bit bullish on the daily. So we've got bullish on the weekly. We've got bullish on the daily. So effectively, we've got bullish all around here on the daily, and we've got bullish on the weekly. So now we drop down another time frame, drop down to the 4 hour. What have we got on the 4 hour? On the 4 hour, it's been bullish, but it's been a little bit bearish recently. Now it's turning bullish again. But we know that on the higher time frame, it's pretty bullish. And if we were to drop down to the 1 hour, correlation on that, the 1 hour is showing us that it's bullish. We kind of got bullish all the way down. And if I was trading on the 1 hour, I'd be like, this looks like a buy. So then I would say the correlation is good for a buy on the Rand. So then what you could do is you could say, okay, this looks like a pretty good buy. You can go in here. I'm actually going to take a buy on this because I believe it's going to go to the upside. But got to be careful on this and make sure that it's going to give us a good risk to reward. So let's have a look at stop loss at around 1760. That will give us $250 stop loss. And let's see if it'll make us a profit if it goes to 1860. Not a lot, but it will make you a risk to reward and it will make you a profit. So what I would say is buy. Okay. Go with that. So if you're looking at correlation on these trades for that sort of scenario, just go up to the higher time frame and I just want to see that the risk to reward looks okay. Yeah, that looks fine. You just go up to the higher time frames and you just go and have a look at what's going on the higher time frame. So the correlation is simple, really. And like here, S&P 500, let's go up to the weekly. On the weekly, if I look at the S&P 500, there was a bearish candle last week. The S&P 500 is calling bearish. There's a bit of a bullish candle this week growing, which is halfway up the candle. It's not a strong bull, But overall, the S&P 500 is bullish in general, so it's going up. We go back down to the day, and I look at that and I say, on the daily, that's pretty bullish all the way. Bit of a correction, looks bullish to me. And then you just take it back to the 4-hour, and once again, it's been bullish. There's been a bit of a correction. Looks like it's still going to continue on being bullish. That's how you correlate your time frames. And try and, if you're trading on the 5 minutes or the 15 minutes, try and trade with a view to going the same way as your day, your 4-hour. You know, that if the day's bullish and the 4 hours bullish and you're trading on the 15 minutes, try and take all your trades along. And that's the best way to correlate your time frames. Yeah, Daniel, exactly. You said it's not good for your payment next week. You have to pay in dollars. Well, it's exactly the opposite for me, because a lot of my money is in dollars. And when it gets stronger, I try and send as much as possible over to dollars, and it comes back in a bigger amount. So I like it that way. Yeah. Rob, could you do a chat with correlation? Right. Excellent, Bruman. Good for you too. Thanks, man. Feels good since yesterday. Well hired. ETC. I'm just going through the comments here. Okay, yeah, there we go. So, good. Bitcoin, I'm not convinced on. No, I'm hanging back with that, and I'm waiting for a trade on Brent crude oil as well. I learn in dollars though, so that's dating the weak rand. Exactly, Daniel. A lot of my money comes back in dollars, so for me, the weaker the rand gets at the moment, I'm happy. When the rand gets strong, when the rand strengthens and does what I don't really want it to do, then what I do is I send the money over to the investments. And then when it weakens again, which is what I want it to do, then I can bring my profits back. So if there's any dividends, anything paid in the USA, anything that comes from the USA can lie there. And then when the rand gets down to like 1860 or whatever, then I'll bring it back, bring the money that I need, and I get actually more than you should. That's the way to do it. It's the only way to do it. If you're having to pay in dollars, that gets expensive. Anything I have to pay in dollars is painful. Not like paying in dollars. Nice one, Daniel. That's a good one. Yeah, I need my nap on the beach, but I think the reason I'm yawning is because it's wintry here. It's been raining for the last 2 days. It's been a bit sort of like chilly and whatnot. That's making me feel kind of like tired, I can't really even go lie on the beach. It's like, no, man. Yeah. No, thanks, Daniel, for telling them. It's cold out there for me today. Pretty chilly. But I do have somewhere to go. I want to go and do something. But go and have a bit of a lunch. Bit of fun. But that's something else altogether. Got the jersey on. Off we go. As you can see, it's actually quite nice and warm in the house. I'm not exactly wearing like jackets and whatnot, what have you. So house stays quite warm, particularly here in my little office. Quite nice. Yeah, the birds chirping outside. It's stopped raining now, I think. Sounds like it. Actually, I enjoy the cold, to be fair. It's one of the reasons I love Cape Town is because, for us, 35 is like really hot. 30 degrees. I mean, most of the year is 24, 25. And up north, sure, I'll tell you, I was in some places where I was like living in 44 degrees. It's hectic. So living here has been absolute pleasure for me for the last number of years. I've been here a long time. And I love the temperatures here and whatnot. And like when I go back up north for anything and go visit people, whatever the case, the minute I land there, I feel the heat. Nice and cool here. I like it. I don't mind. And in winter, it's not that cold. It doesn't even get as cold as up there either. It's fine. I mean, I live at the beach on the coast, so you get a lot of thick air and humidity, so it doesn't get that cold here. Depends if it's freezing in the Celsius or the FK. I think it's the same, but yeah. But it never really gets below 4 degrees Celsius in Cape Town. And yeah. Whereas up north, I've been in the cold times, I've been in -3 and stuff like that. So yeah, no, it's much better. I like the temperatures down here. They're much closer together, much better. Unless it's a windy day, of course. We'll get some windy days. That's for sure. You can get some cold weather coming in there. That I can say. So I actually took a trade here. Can you believe it? Yeah, of course. I'm back in the US dollars that they are again. What is wrong with me? Why do I keep buying into that trade? I must be insane. Eh? Keep buying into this trade every single time. Keep on getting into it. Got out for a profit the other day, and now I'm back in it again. And I must actually look at my other accounts as well, see what's going on there. Add in there as well. Gold. Let's see what's happening with gold now, Shane. Is it going down? Is it going up? Well, it's come into that level. It's coming into that level nicely. Look at that. It's coming into that level. And now we have to just see, is it going to take that money and go, or is it going to break through? If it breaks through, you've got a nice short trade all the way down to this 32.67. So here's a bit of a gamble, eh? It's either going to take this money and start going up again, or it's going to break to the downside and go. Let's use this for a bit of fun and see what we got here, because we know that's already broken. Okay, so what I would look out for if it does break through is that level, just check where it goes. But there's only 2 touch points here, so it's not that important, this trend. But just looking at it and thinking, well, if it hits that, it could bounce up from there as well. Yeah, so then you're looking at 33.15, 33.20. And yeah, I think it's probably going to take the money and go up there, actually. Let's just see if it gets a green candle, if it goes. Gold is thinking, yeah, it's busy working itself out, busy deciding which way it's going to go, what it wants to do. This is true. Sitting on your hands is the hardest thing to do. Patience. Patience is impossible. Patience is really, really, really difficult. How can you remain patient? It's impossible. It's really impossible. I don't know. There's the fib. Yeah, that level comes out quite close there, doesn't it? That is quite the level, eh? Yeah, it looks like that is quite an important level, actually. Interesting, eh? That little level there with the line that I just drew there is actually your golden zone. That's really interesting. So if it breaks through this little level of money here, the golden zone is down here at this trend. That's actually really interesting at the 33.20. So yeah. Interesting there, Shane. Very interesting. Interesting point. I just try not to confuse everybody with different indicators and whatnot. It's just Shane likes to use fibs, so I'm just showing that. That's great. I tend not to involve myself with too many indicators. Yeah, well, if you sit in your hands and you make them numb, then you won't make the mistake of doing the old rush into a trade. Beer time, yeah, Brewman, if it's 40, definitely beer time. Certainly beer time. Tell you what, I was once standing. I had a shop in the north up there, and there was a car park in front. And I once measured the temperature on the car park around 65 degrees. The tar was looking like it was gonna melt, man. So hot, I tell you, crazy stuff. So let's just see here. The Brewman's gonna go for a beer, but then me too, actually, because I can. Yeah. Ah, look at that. See, that's dropped. That's a bit better. That looks better. Not bad at all. Not bad at all, man. Not bad at all. Looks like we're going to get some good trades. Patience is the good key to good trading results. It only took me years to figure it out. Later, guys, I will be thinking of you. Freezing in the south. Ruman, it's been fantastic having you on the show again. Glad to see you here. I will be ending the show soon anyway, so good stuff. I hope to see you on Thursday, and if not, definitely see you next Tuesday. It's great having you here, and it's always an interesting chat. Enjoy your beer, and I will keep well. Yeah, patience is the most important thing, and letting the trades come to you. You know, it's amazing how we will try and force a trade. Let the trades come to you. Let the trades tell you when to take them. And that's where the question earlier came in, where the guy said, should I use like all the different instruments and what have you? Of course, you're looking for trades to come to you. Stop trying to trade on one thing. Then that one thing never gives you a trade. Just get involved in everything, man. Just trade everything and enjoy it. If you want to trade on one product, let's say you only want to trade gold and you only want to trade the US 500, and maybe you only want to trade the Tech 100 or something like that. You put those three up. Those are your three trades. The only way that you can trade on only three instruments, because you know them so well now, you're brilliant at this. The only way you can do that is if you're trading on 1 minute or 5 minute charts. That's the only way you can do that, because then you can take trades on them all day long because there will be movement. But if you are trying to trade on only three instruments on higher time frames like day or 4 hours, something like that, you're never going to get a trade, and you're going to end up trying to force trades. So what you need to do is look for any trade that might come about, that might be available to you, that you can take in the markets, and then trade according to that. That's the only way. So guys, I am actually, Nayan, see you later, Bruman. Okay. I am actually going to head on my way now. It is pretty much the end of the show. It's pretty much, I've been here for a couple of hours, so it's time to go and do my thing. And I'll spot you guys on the rebound. It's been fantastic having you guys here again. It's been great. I didn't even go through the news today. I got so involved in chatting to you guys and talking to you and having a bit of fun. But I hope you guys can see me with my small little picture on the top corner here. I try to keep my mug out in the way so you can see the charts when we're looking at the charts, and I'm not in the way. And I don't leave the risk factor in the way as well, like I did the one time before. It's been good talking to you guys again. It's been fun. And I hope to see you guys again really, really soon. Thursday, we'll have the live show again, 1400 GMT +2. And I obviously still do bring out the videos every week, a couple of videos a week for you guys to go through. And obviously, every single morning, I'll bring out the trade of the day for the members so that you guys can obviously see what I'm trading and see if it aligns with what you're trading. And if there's any bit of education that I can throw in there, I do throw that in as well for the guys that are supporting the channel on the membership. Guys, I want to thank you guys for being here. It's been fun. It's been great again. And I do hope you guys will have a fantastic, profitable day ahead and week ahead. I'll see you guys on Thursday. Keep your feet on the ground. Reach for the sky. and cheers.